everyone. I'm Sharon L. Brown, the principal broker with Results Realty, and today I am talking to Mario Reynolds. And I'm going to have Mario introduce himself really quickly.
Hi, I'm Mario Reynolds with TPI Mortgage. Wow, I've been in the business since '98, actually. So I have a few years experience. I'm an electrical engineer by trade, but I got into doing mortgages a year after college. So that's where I've been at ever since.
Okay, wonderful. And a large part of this discussion, I wanted to be, because as a real estate professional, I'm getting a lot of questions, and I have been over the past couple of weeks about how is COVID-19 impacting the real estate market. So I wanted to take the time today to talk about it from a housing perspective in terms of what I'm seeing in terms of buyers and sellers. But then, Mario, I wanted to bring you on so that you can give my viewers an in-depth look in terms of how a buyer's ability to get a mortgage and how the mortgage rates are may be impacted or may not be impacted, and what do you see down the line. So first off, I wanted to I guess talk a little bit about, do you think the housing market is in trouble right now?
The housing market, no, not so much. Not from the trend that we're seeing right now. It's actually a great time to buy if you can. I've told friends and multiple clients, because I'm partnered with a CPA firm as well. We have a lot of people that come in that are small business owners, and they have income and need I guess you could say, a outlet, some type of tax breaks and some way to invest in money. And we usually tell them that, try to buy a piece of property, an investment property if possible. But if you do not own a home, or if you're looking for a second home or an investment property, it is actually a great time to buy right now.
Right. Okay. And then I just wanted to add, because I think a lot of people are looking back at what happened in 2008. And, people were faced with unemployment. A lot of people lost their homes, and it was just a financial hardship. But I think the difference with this potential crisis is that this is based on a health crisis. And essentially, we have put a pause on the economy so that we won't spread, to actually reduce the number of cases and to hopefully reduce the number of deaths associated with the pandemic. So I think that's a key point to kind of make as well as we're kind of going through. Interest rates doing right now, I know last year around this time, interest rates were actually a little higher, correct? Or do you think interest rates may increase, or what are you finding?
Well, actually, that's correct. Rates were higher last year at this time. Right now, we have some great rates going on right now, which was surprising. I will say that the rates have fluctuated over the past couple weeks.
Okay.
At one point, the bond was like, it was crazy. We had never seen it that low, and we were like, "Oh man, it's going to be great." And then when everything was going on, the Feds announced the 0% Fed cuts to rates. Everybody started calling. I was like, listen, that 0% is not for you guys. I was like, it's not for me. It's not for the everyday person. It's nobody's going to give you a mortgage at a 0% rate. What that actually is the people that borrow money from the federal government, Wall Street, the larger banks, the large companies, they borrow money at 30, 60, 90-day increments there. And then what happens is that the government, in order to keep the economy going, will give you the money at 0% instead of charging them interest on it, so that they're still putting money out there, which keeps the economy going. So that's why I said we're not really seeing the biggest, we're not going to hit a recession, because they caught that and they did that pretty quickly. Now, as far as interest rates go, we are seeing some rates at they're very low for conventional FHA, USDA. All the rates are pretty low right now. We're trending down to some rates as low as 2.875 on some of the government programs. you know, and even in the conventional level, we're at like 3.375, 3.625. So rates are there. I mean, everybody is flexible, but again, it's based on credit score and the type of loan you're going to do and how much money you're putting down. But we do have some very, very low rates right
Okay, great. And I actually want you to, I have a scenario because you mentioned like interest rates under 3%, but I know that's probably people with very low debt to income ratio, high credit scores. But I wanted to, I guess, find out a little bit about, I guess, with FHA loan program, if someone has, say, a credit score of 640, just in terms of a range, I know you can't give me an exact, but if someone, or I guess let me give you the scenario. So a person with low debt to income ratios, credit score of around 640, looking to purchase, say, a $300,000 home, where do you think they would be able to get like low threes as far as the interest rates, like under 3.5?
now. They'll probably be around 3.5, exactly.
Okay.
You're going to be, so yeah, you'll be right in that range
Okay.
right now with things that are going on. There are some companies out there that are charging higher rates because of the pandemic, but it's not so much because of the borrower. It's what's happening on the secondary markets that, everybody doesn't see, right? So it's these servicing companies are charging more for their business because they're not sure. Everybody was unsure of what's going on in the market. So what happens is, the Feds cut rates to keep people involved and to keep the banks going, but then the banks increase their margins on the rates, almost like an insurance thing, because they figured they weren't going to get as many people buying. So they increase their rates, or risk factor is what I'll say. It's based more on risk factor. If you were under the 640 mark, then there were some rates that were closer to 4%, right?
Okay.
They could still do everything down to, 580 FHA, still like that, but they were charging a little higher premium. But on average, right now, if you had a 640 credit score, you're going to probably be at about 3.5%. If you go above that in the 700s or so, then you get down to the 3.375, 3.25, 720. You might be in that 3.8. But it be based on risk, LTV, of course. But FHA is always 3.5. But they're going to look at all factors.
Okay.
What kind of intake, what kind of reserves you have, and your credit history as well.
Got it. Okay. And you mentioned LTV. So for our viewers that don't know, can you explain a little bit about that? No, that's fine. I know the loan to value, but what does that mean, loan to value?
Okay. When we look at LTV, it's loan to value. That means how much money you want to borrow or how much money you owe based on the value of your property or the house you're trying to purchase. For a purchase loan, and everybody knew when you said conventional, everybody thought they had to put down 20% because that's how it was previously. Right. Now conventional offers, they even have a 3%, 5, 7, 10, whatever you choose, and that's your loan to value is based on that. So FHA at 3.5% down, that means your loan to value is 96.5%, which is why there's mortgage insurance. The premium mortgage insurance, and that is, it's a government-backed loan, and the government, you're paying insurance so that you don't default on that property.
Exactly. So, and that's because you're not putting down as much, and so you have a higher loan to value ratio, and so you have to pay insurance so that banks can have. You have to pay insurance so that banks can have assurance that you're not going to default.
Right. Exactly. Okay. Let me ask you, Sharon, do you find that people are still buying and selling right now?
Oh, absolutely. So with my clients, I have had some buyers and sellers who have decided to put their home buying or selling goals on hold temporarily, just so they can kind of see what the pandemic does. But the majority of my clients, buyers and sellers, have continued to move forward. And one of the reasons why is because my clients, some of my clients, simply put, they still have to sell. Either they're changing jobs, they may even be going through a divorce. They could have already, they already had plans to purchase a larger home. They still want to do that. And then sometimes too, like with some of my, clients are, selling a home of a deceased parent. And so it's an estate sale. And so there are still circumstances where a buyer and seller still have to move forward. And I actually have some people that they may not even necessarily have to move forward, but they still want to because they want to take advantage of, as you pointed out, the low interest rates. And that's one of the reasons why a lot of my buyer clients are still moving forward, because as you mentioned, I mean, we're in sort of unprecedented times now as far as getting an interest rate under 3.5%.
So, Sharon, how's the Maryland real estate market right now?
Okay. So I actually have been looking at the trends, and I have an example in terms of for Charles, because Maryland is that's the whole state, but I can give you some examples of what I'm seeing in Charles County, based on April 2020 and what I was seeing last year in April 2019. And I'm just going to have my little cheat sheet here. So in Charles County, I live in Charles County. My office is in Charles County, so that's why I chose this county as well. So in April of last month, April 2020, we had 299 new listings come on the market, whereas April of 2019, we had 448 new listings. And so we did see a decrease in April of 33% from last year.
Right.
But that's the significant, I guess, change. But in terms of the number of homes that went under contract in April of 2020 versus 29, they were pretty close. So last month, April 2020, the number of homes that went under contract was 242, whereas in April 2019, 273 homes went under contract. So that's just an 11% decrease, which is not that significant.
Yeah.
As far as the total number of homes that are closed, they're pretty much neck and neck. So April 2020, last month, 222 homes closed, and in April 2019, 224 homes closed. So it was just a two settlement or two closing decrease between this year and last year in April. The average sales price, this is where it's kind of a little surprising. So April 2020, the average sales price was $350,000 in Charles County, versus in April 29, the average sales price was $302,000, which was a 14% increase. So we've seen average sales price increase this year. And then the average days on the market actually decreased as well. So last month, April 2020, the number of days was 32 that a house was on the market, on average. And in April 29, it was 45 days. And so we saw a decrease in the number of days on the market. And so, and the reason behind that is that in last month, April 2020, in terms of inventory, we only had about a 2-month supply of inventory. And so it was pretty much, we had an undersupply. Generally, you want to see between a 4 to 6 month inventory, and anything over 6 months would be an oversupply. But because we had an undersupply, only 2 months of inventory, buyers actually had to compete for homes that they wanted to purchase, and so that actually drove up the sales price. So that's why we saw that $50,000 average sales price increase. So that was pretty. When I looked at those stats and was doing my research, I wasn't too surprised, because I knew that even with my listings, I actually listed 4 houses in April, and all 4 are under contract as of today. And all 4 received multiple offers within like 7 to 10 days of me putting the homes on the market. So it is definitely still, it's definitely a seller's market right now.
So just a question off of that, since you're saying it's a seller's market, does that mean it's a good time to buy?
It's so the thing is, with now, it's an interesting time because it's a seller's market, because some sellers have decided to hold off putting their homes on the market, and so the inventory is low, which normally means that the houses that are on the market can command a higher price. But it's a buyer's market in terms of the interest rates, because now would be a good
Right.
time for a buyer to lock in those 3.3%. As you know, interest rates are
Yeah.
3.5% interest rates, because over the life of their mortgage, they're going to be able to save, 20, 30, 40, $50,000 or more. So I would say it's both, and then it also kind of depends on the price range too. So yep, so I think now it's always a good time to purchase if you're looking for houses under 300,000. And now is also a good time for those buyers who are looking in the 300 to $500,000 range, because they can get in the $500,000 range, but their mortgage payment won't be as high as it would have been, say, this time last year. I covered the Charles County stats, but if you're in Maryland and or DC, and if you want the statistics or the home values or the appreciation of what the market is doing for your particular area, feel free to give me a call, and I would be more than happy to research that information and provide it to you. We can actually do a video call or just a telephone call, and I can kind of walk you through what the impact of COVID-19 is maybe having on your area, or in most cases that are not that is not having on your home value. So definitely give me a call or shoot me an email if you want information for your area. So Mario, thank you so much for taking time out of your busy schedule to jump on this, to do this meeting with me, to provide necessary information for all of my clients, family, and friends. So again, thank you. I appreciate your insight.
No, thank you. I appreciate it. Thanks for asking. Anytime, any questions. I enjoyed it. So, hopefully we'll get the chance to do another one.
Okay, hopefully so. No, I think we will, because I'm sure actually, I'm going to put you on the spot now, because once I post this video, I'm sure I'm going to be inundated with questions. And
Okay.
would you be game to do a live Q&A for any my clients, current, past, family, and friends that may have questions?
Yes, definitely. We could do that Q&A. We could even get into as far as giving some scenarios as far as the housing or any of your listings.